All right, so everyone's back from their Thanksgiving feasts and ready for round two. Well, the market certainly didn't take a break. It was a short session, sure, but let's just say there's plenty to chew on in this market deep dive closing market update. November 29th, 2024, hot off the press. So, did all that Black Friday shopping frenzy spill over into the markets? Let's find out.
It's really interesting. You'd think a shortened trading day might mean things would be quiet, but not today. We saw the Dow not only hit a new record close, but it actually crossed 45,000 intraday.
45,000. Wow, that's a pretty big milestone. But, I got to ask, does this really signal underlying strength, or are we just seeing a little sugar rush from the holiday spirit and lighter trading volume?
Yeah, that's the question, isn't it? It's actually the fastest we've ever seen the Dow hit a new 5,000-point milestone. Now, historically, these really fast climbs can signal, some overheating. But on the other hand, we are also seeing the S&P 500 hitting record highs. So it seems like this bullish sentiment is pretty broad.
Okay, so it's not just a Dow Jones party. And speaking of parties, weren't we talking about how Black Friday sales could impact specific stocks? What happened there?
Well, both Walmart and Amazon saw gains today.
Interesting.
And that's significant because, retail sector performance is often seen as kind of a leading indicator of consumer confidence, which, of course, plays a huge role in the overall economic health, right?
Right, exactly. So, beyond just those two companies doing well, it could suggest that consumers are feeling good, spending money, which is obviously a positive sign for the economy, especially as we head into the whole holiday shopping season. But I guess the question is this optimism justified? We'll have to wait and see what that upcoming retail sales data tells us. But before we get ahead of ourselves, what else caught your eye in this market deep dive report?
Well, we also saw gains in the Russell 2000 today.
How interesting. So small cap stocks are joining the rally. It seems like this positive sentiment is pretty widespread. What about other assets? Did anything interesting happen with like oil or gold?
Yeah, both oil and gold prices were actually up today, which paints a bit of a complex picture.
How so?
Well, on one hand, rising oil prices could signal that there are expectations for continued economic recovery, right? Increasing demand. But on the other hand, it also kind of raises that specter of inflation.
Right, right. And gold, safe haven or what's driving that?
Well, gold's rise could suggest there's still some uncertainty out there about global economic stability.
Yeah.
It'll be interesting to see how these kind of potentially conflicting signals play out in the coming weeks.
Yeah, definitely. Seems like there's a lot happening beneath the surface, a mix of optimism and caution, growth, inflation concerns. Yeah, the market always keeps us guessing. And speaking of unpredictable, can't forget about our favorite volatile friend, Bitcoin. Seems like it's bouncing back today, up about 2.5%, getting closer to that $100,000 mark again.
Yeah, it's fascinating, isn't it? Bitcoin had that recent pullback, and some people were wondering if its bull run was over. But this resurgence suggests maybe, just maybe, it's finding new support levels. But as always with Bitcoin, buckle up because the volatility is far from over.
Oh, absolutely. And I think that unpredictability is part of what makes it so captivating for some investors. Speaking of keeping us on the edge of our seats, sounds like December is going to be a busy month for economic data. What should we be watching for?
Absolutely. The report highlights a whole bunch of really crucial economic releases coming up in December, starting with the monthly unemployment report, right? And that report will be watched very closely to see if the labor market is continuing to grow or if any signs of weakness are starting to emerge. And beyond just the jobs report, we'll also get data on manufacturing activity, consumer sentiment, factory orders, all providing valuable insights into the health of the U.S. economy.
So a data-packed December awaits. But what I'm really curious about is how all this data will impact the Fed's upcoming December meeting. The market seems to be anticipating some action on interest rates, doesn't it?
It does. The CME FedWatch tool right now, it's showing a 66.3% probability of a 25 basis point rate cut at the December FOMC meeting. So that suggests that the market is leaning towards a more accommodative stance from the Fed. But as we've been talking about, the picture is quite nuanced, and all this incoming economic data is going to play a crucial role in the Fed's final decision.
It seems like everyone's on the edge of their seats waiting to see how these reports play out and how the Fed will react. But, we can't forget, the U.S. market doesn't exist in a vacuum. Global events matter too. Speaking of which, the report mentioned some developments on the international front, didn't it?
Absolutely. We've seen rising inflation in the Eurozone,
Mm-hmm.
and Japan's inflation is actually exceeding estimate.
Wow.
Yeah. So it really underscores the fact that the U.S. market is deeply intertwined with the global economy. And these global trends, especially when it comes to inflation, can significantly influence investor sentiment and, of course, the Fed's policy decisions.
Right. So we can't just focus on what's happening here in the US. We need to be aware of that global context. So much to keep track of. But before we move on to some of the specific companies mentioned in the report, is there anything else from today's market activity that you think is worth highlighting?
I think it's important to emphasize, even on a shortened trading day, like today, the market can offer us valuable clues about broader economic trends and investor sentiment. And today's market action in particular, it raises a pretty crucial question.
Oh, let's hear it. What's the question on everyone's mind?
Well, is all this optimism, really justified? We see record highs, this surge in retail stocks, Bitcoin seems to be back in the game. But we also have those potential red flags, those rising oil and gold prices, those international inflationary pressures.
It's like a tug of war between the bulls and the bears right now. But before we try to predict who's going to win that battle, I'm curious about some of these individual companies that were mentioned in this Market Deep Dive report. It seems like there were some big winners and losers today, even beyond, those retail giants.
Absolutely. Let's start with a company that had a particularly rough day. Applied Therapeutics. Their stock plunged over 76% after they received some pretty disappointing news from the FDA.
Ouch, 76%. That's a massive drop. What happened there?
So the FDA basically indicated that they're not prepared to approve a new drug application from Applied Therapeutics for a treatment targeting a central nervous system disease. And this is a significant setback for the company because it represents, years of research and development potentially going down the drain.
It's a stark reminder of just how risky the pharmaceutical industry can be. A single regulatory decision can have a huge impact on a company's valuation. Now, what about Supermicrocomputer? I saw that they also took a bit of a hit today.
Yes. Supermicrocomputer stock dropped almost 7%. And their situation is a bit more complex. They've been experiencing some volatility lately. And earlier this month, they actually received a notice from NASDAQ that they weren't in compliance with one of the exchange's listing rules.
A notice from NASDAQ? That sounds pretty serious. What does that even mean for the company and its investors?
Well, so stock exchanges, they have these specific requirements that companies need to meet, to maintain their listing. And these can include things like minimum market capitalization, share price, adherence to corporate governance standards, and when a company falls out of compliance, it faces the risk of being delisted.
So essentially, this notice from NASDAQ is a warning shot. Supermicrocomputer needs to get its act together, address these compliance issues, or they could get kicked off the exchange. No wonder investors are reacting negatively.
Yeah, exactly. The uncertainty surrounding their listing status, coupled with the recent market volatility, it's likely weighing heavily on investor sentiment.
It's a good lesson for all of us, investing in individual companies. It's not just about looking at their products or services. You have to pay close attention to their financial health and their regulatory compliance too. But you know what? On a lighter note, let's shift gears a little bit and talk about some of the winners today. Besides those retail giants, Dell also had a nice rebound, up over 2.5%.
Yeah, Dell's performance is particularly interesting because they had a pretty rough day on Wednesday.
Right.
They released some guidance that kind of disappointed investors.
So what do you make of this rebound? Is it a sign that investors have regained their confidence in Dell? Or is it just a temporary blip in this, volatile market?
Well, it's tough to say for sure. It could be that investors have digested the guidance and they're now more comfortable with Dell's outlook. Or it could simply be a case of, short-term market fluctuations. Stock prices, they often overreact to news, both good and bad, before eventually kind of settling down.
That's a good point. Sometimes it's best to take a step back and try not to get too caught up in that day-to-day noise. Long-term investors, they tend to focus on those fundamentals like, a company's earnings growth and its competitive position rather than just those short-term market swings. But let's be honest, it's tough not to get caught up in all the excitement, especially when the market's hitting these record highs and everyone's talking about, a potential Santa Claus rally.
Yeah, it is. It's certainly an exciting time. But as we've been discussing, there are also those potential headwinds on the horizon, both domestically and globally. And those December economic reports are going to be absolutely crucial in determining whether all this optimism is actually warranted or if we're in for a little bit of a reality check.
Absolutely. And the Fed's decision on interest rates, that's going to play a major role too. Will they actually cut rates like the market seems to expect, or will those inflation concerns hold them back?
It's a delicate balancing act for the Fed. They need to support economic growth while also keeping inflation under control.
Yeah.
And as we discussed, they have to consider that global economic landscape as well, not just those domestic factors.
It's all connected, isn't it? So we've covered a lot of ground today. We talked about the major market indexes, retail performance, those individual stock moves, global economic trends, and of course, the Fed's upcoming decision. It feels like we've really taken a deep dive into this market deep dive report.
We have. It's been a fascinating discussion, and I think we've extracted some really valuable insights for our listener.
Totally. And as we head into December, I'm sure there'll be plenty more twists and turns to keep us on our toes. Any final thoughts before we wrap things up?
I think it's worth reiterating, the importance of looking beyond just the headlines and really digging into that underlying data. The market can be a complex and unpredictable beast, but with a little effort and some informed guidance, we can navigate it with confidence.
Couldn't agree more. It's about connecting those dots, understanding the bigger picture, and always staying curious.
Yeah, connecting the dots, that's what this deep dive is all about. And we've definitely covered a lot of ground today. You've given our listeners plenty to think about as we head into December.
Oh, yeah. A lot of data to keep an eye on. It's going to be really interesting to see how these economic reports end up shaping, the whole market narrative.
Speaking of narratives, before we wrap up this deep dive,
hmm
I'd love to get your take on a question that's probably on a lot of investors' minds right now. We've seen this incredible market rally, especially with the Dow hitting 45,000. But with all this uncertainty we've been discussing, inflation, interest rates, global trends, all of that, is a Santa Claus rally actually in the cards this year? I mean, there's certainly some factors that could support a continued rally. Consumer confidence seems pretty strong, corporate earnings have been solid, and the Fed seems, inclined to be supportive. But as we've said, those inflation concerns are still out there. And any negative surprises in those upcoming economic reports, well, they could easily spook the market.
So a Santa Claus rally is possible, but it's definitely not a sure thing. There's a real chance those economic reports could throw a wrench in the works.
Exactly. It's a classic wait-and-see situation. But, that's part of what makes the market so dynamic and engaging, always keeps you guessing.
Absolutely. And for our listeners out there, here's a thought to ponder as you watch the market unfold this December. If the Fed does actually decide to cut rates, what will that signal about their confidence in the economy's long-term health? I mean, is it a sign of strength? A proactive move to kind of keep those good times rolling? Or could it actually be interpreted as a sign of worry? Maybe even a desperate attempt to prevent a slowdown?
That's a very astute observation. The Fed's actions, those are going to be scrutinized, and their messaging, that's going to be just as important as the actual rate decision itself. It's going to be a fascinating few weeks for sure for market watchers, and I can't wait to see how it all plays out.
Me neither. So to sum it all up for our listeners, even on a short trading day like today, the market gave us plenty to think about. We saw record highs, some promising signs of consumer confidence, and of course hints of those potential headwinds. And as we head into this data-packed December, it's clear that, both the U.S. and the global economies are at a pretty critical juncture.
Yeah, it's a good reminder that, staying informed, understanding those forces at play is more important than ever. Thanks for guiding us through this deep dive. It's been a pleasure, as always.
The pleasure was all mine. And to all our listeners out there, thanks for joining us on the deep dive. We'll catch you next time for another insightful exploration of the market and beyond.